Gotta get the pop out chat going. 1 second. Forgot to do that ahead of time. There it is. And then let me get this link out to people. Boom. All right. Where is this other? Here we go. Sorry, I'm fixing my cords here. Come on, Josh. All right, so I think welcome everyone first. If you're watching this in playback mode, it is July 18. We are officially we're over halfway done with the trading year. And it's been a tough 5 months, I think, since February pretty much. So March, April, May, June, July. That was 5 months of really tough trading. You have to, in this market environment, pick, the right, just like the two names that will do what you want them to do. If you're looking somewhere else, odds are that they will fail their breakout, chop around. The liquidity is really just going into a couple names a day. And right now, or for the last couple weeks, it's been only FANG. And now that has faded. So we're in a very precarious spot. I listened to some podcasts this weekend. This is Mom. What's up with the facial hair? I've always had facial hair. I don't know what you're talking about. Even coming out of the womb, you would know that if you were my mom. I will be reviewing charts, but I was looking at some podcasts, and they all have pretty much the same thing to say. Not Nook is Piper. They all have pretty much the same thing to say, which is that breath sucks, market breath sucks, and it looks like we could be going a lot lower. So I'm just going to review some charts and talk a little bit about what happened last week. Yeah, it does. It shows you as a different name. Obviously, the first chart that we want to look at is Amazon. And let's just zoom out here. I believe that... So we had this really nice breakout, right? It lasted about... Well, we'll say the breakout happened here, which would be the second. So it was about 2 weeks, 8 to 10 days long. And I was able to capture these 3 green days. And I got out on this last green bar here. And I was waiting for it to sort of set up again, but it never. So we had a little bit right here on the 13th. We had an attempt to get over into the breakout, So that would have been the breakout. The continuation of the breakout would have been over 3750. And I remember, let me just actually turn to my actual client, trading client, so you can see better what I'm talking about. Here we are. Yeah, I think you guys can see this better. I think, so on this day, you know, it tried to get above 3750 and it basically rejected. And once it rejected that day right there, you can zoom in a little more, I was out of my long position. So you could see right here in the morning, we shot up and it completely faded. It even tried again right there. So I know this line is good. This line is a really good line. 3750. And once it broke below, and then it broke, it didn't only break below 3750, it also closed below my other support, which is like, it was even more of a danger sign. To be honest, I should have gone short at that point when we broke below, but I was no longer looking long below 3750. And I tweeted to the effect of that. And once we entered the demand zone around 3620, so you can see we have this little congestion area here and the low of day here, I was slightly interested, but I was way more interested in getting long at 3550. What's up, DM and Cody? 3550 is a really important spot, as we're all aware. It was the top of the final move back in last August, or you know, it ended September 1st, and then we retested it again in May, and now we're back testing the breakout. So the question is for me, is 3550 going to hold? Because there is actually some potential here where 3500 comes, because we have this little gap right here. You can see my cursor, and we have these 1, 2, 3 wicks on these days. So from 622 to 624, and we have a gap there. So 3500 is a possibility. I wouldn't, you know, if we got to 3500, the thing is we would be below the 21 and the 9 moving average at that point, but we would be, let's say it happens Monday. At that point, we would have 1, 2, 3, 4 days down. I would like, to be honest, if we got into 3500, if we close the gap, so that's looks like it's 3511. If we close the gap in the morning tomorrow at 3511, let's say we open deep red, I would expect them to bring it back to fill the gap above and to retest 3552. So that is if this is just like me thinking out loud for what I'm gonna do, what my plan is. The futures, I think they just opened and I have no idea. It looks like they're flat right now. Yeah, I think they just opened. I could be wrong, but I don't trade futures. But if we open deep red at 3511, you know, it's not a bad play to try to buy that, because I have a support a little bit lower at 3490. So I would be playing 3511 to back up to 3550. Really, really easy. Thanks, Cody. Yeah, so it looks like they're flat right now from what I can see, which is not the worst. Let's say we open at, let's see, 3564. I think it's really easy to play off that 3550 level, and I think a lot of people are looking at it because of, you know, it's like one of the first things you learn when you're learning charts and technical analysis is once you break out of a range, it's a very obvious spot to back test that breakout. So you have a breakout, you have a back test, and then you have a continuation. I have done videos on my YouTube actually of that. So 35.50 back test, easy entry long. I got in on Friday, so I'm a little bit, I think it would be fine if I got in for, let's say, August calls, but I'm in for this week. So if we gap below 35.50 and we get premium crushed, I'll be in a bad spot there. But earnings is coming up 7/29. So this week coming up is the week before earnings week. And in my mind, it is the last week to really make money on Amazon, because the week of earnings week is not a week that you really want to be trading Amazon. Let me check the calendar really fast because I have to. Yeah, so it would be, this week is the last week before earnings week, and then next Thursday is earnings. And 2 Thursdays from now. I don't trade mega caps the week of earnings. It has messed me up in the past, and it will continue to mess me up. So this is the last week to make money on Amazon. I don't expect a complete breakdown before earnings. That would be kind of odd in my mind, unless there's, it'd be really odd. But let's say we get below 3,500. The obvious spot would be 34. This demand zone here, 3,400. But the chart looks really bad at that point if you get below 3,500. Anyway, so my plan is above 35.50. We can look long now because the risk to reward is pretty good. It is around 200 points long. I would say 3,700 is the second target. The first target would be 36.30. Second target would be 36.90. And then my stop would be, 35. Well, here's in my mind, I have to figure out, do I want my stop to be 35.50 or do I want my stop to be 35.10? If it were longer dated, I would say 35.10, but this week I would probably have to stop out at 35.50 if we flush below that sometime in the afternoon tomorrow. A lot of it is about timing. All right, that's a lot just on Amazon. I hope that helps, because sometimes, to make money in a market, you only need to be looking at really one stock. And for the last, week and a half, I've only pretty much focused on Amazon, and it's worked. I didn't short it. I only went long. I just stayed out of it when it reversed. I could have shorted it. I just have a lot more confidence on my long calls than my short calls. But there was definitely money to be made on the short as well. I will definitely get to small caps after I cover the first, the major 3 names that have been moving, but small caps are important. I'll cover the indices as well, so IWM is part of that. Let me flip this screen here. Go back to. Okay. Next one I'm looking at is Nvidia, which looks really, really weird. Not weird. Kind of a big. These are really big selling bars. And so my plan here is simple. My plan is the split happens on Tuesday. We have 3 days down after a really big bear flag that played out back to what I consider to be an important support line at 7, it's around 720 to 728. The supply is actually a little bit lower in this area here. So that would be 717. But my expectation is, Monday going into the split, they're going to try to bring it up, or people are going to want to be in before the split, even though they've pretty much already bought in going back to ever since the split was announced. But I would be surprised if it sold off for 5 days in a row, to be honest. So I'm expecting a little bit of a bounce, and the bounce target is obviously right here, 760. It looks fairly obvious on this chart with these little candles. You can see the the bottom wicks here and also here. So it'd be like 755, 760. So I'm playing basically 726 to 755, 760 with this demand zone 50 EMA as my cushion. After the split, let's say we get a bounce to 760. That would work out for me. I would make some money. I would think that we could actually bounce a little bit higher to the bottom of this area, so 787. If that happens, I would expect another rollover after the split. So let's say we get it to 787. I think it would be good to use 800 as a stop and go short into earning, or like into the weeks going forward. So basically I would like another bear flag to form to get entry on a short. And a little bit of a bounce here. That's my plan. Last one that we're going to be going over before going over the index is Apple. Apple is really like, it was in melt up mode, and after this big gap on the 14th of July, I had no real interest in being in it, and it looks like it definitely ran out of some steam. And to be honest, I think that even after filling this gap, I think that we could still head a little bit lower back into this 140, 142 area. So like wherever this top area is, let me just draw a little line here. Be like that, something like that, 144. That would be a third day down, and maybe like consolidate above this line before earnings. And if earnings are not as expected, fall back into this range as another range bound thing. That would be that's my initial reaction after looking at this chart. We haven't, I don't think we've broken the character of this really steep trend line yet. Yeah, it doesn't look like we've broken it yet. So it's still in an uptrend, even though it found some supply. I wouldn't be surprised if that changed this week, the character of this trend, and we broke down into this area. But that's what I'm looking at with Apple. It's hard for me to trade Apple, to be honest. Okay, since we had a request, we can turn to small caps, because obviously neither Amazon, Nvidia, or Apple are in small caps. So we'll turn here. I remember back in March, actually, it was a while ago, but 214 was a very important level for me, because 214 was the 1.618 extension. So it goes from the COVID drop in last March all the way to the bottom where we hit in March. And the extension hits basically that area that we've been holding. So if we were to flush, let's say to 206, which would be the 200 EMA, it would still technically be in an uptrend, because we're holding the second demand zone here. But the momentum makes it very dangerous for a bear flag to form and to back test 214 and then to go lower. So let me just try to path what exactly I mean by that, if I can find the pathing tool. Come on. I thought it was here. Oh, path, no. That's not it either. There it is. So it would look something like down here, back up, and then back down here. That would sort of, that would be sort of the idea. And you can see like why I would make the arrow go here is because we have a gap right here actually at 198. So I think going shorts IWM below 214 is the play. The 200 EMA bounce could be dangerous if you get caught in that. But any sort of bounce, I might reshort it if it doesn't recover that level. But actually, like, I'm looking at this right now, and I would be very happy going short IWM even more. And we have even another gap right there, which would be a back test actually of the high from February. So that would be kind of crazy. That would be a very big drop. I don't know what is the range on that drop right there. I'm really bad at looking. Oh, here we go. Price range. That looks to be a 27% range or possible short. That would be wild. But that's the most likely option. The second most likely option is we bounce and then sort of like mess around here until we recover to 215. And if we get above 215, it's no longer in danger of flushing. So that's why 215 is very important. 214, 215. Let's go to QQQ. I hope, oh my gosh, I hope that, yeah, okay. All right, QQQ. This is an interesting one because you can see that I have channels drawn out right here. And I know that there are some areas like right here and right here that go above this channel, but the channel is meant to be a general. I don't trade off this channel. I use it to look at the what's it called? The character of the chart. And so there will be times when the character, it goes outside of the Bollinger Bands, or it moves above VWAP or whatever, just like it'll move above the channel. But in general, on the bottom of this channel, we basically have 1, 2, 3, 4 points touching it. So it's not out of the realm of possibility for us to basically retest the bottom area of this channel, which would be somewhere around here, 340, 342. So in my mind, I have a nice little line here that last time we had a pullback at this trend line and we basically bounced, and now we have failed to close multiple days over 360. We had two closes. Sorry, let's see. We had 3 closes over 360, but they were not pretty candles at all. So I expect somewhat of a bounce at the same area, which would be the 21-day moving average, which is the blue line on my chart. But I think that any sort of further bounce below 360, and we can see a back test, or not a back test, but a test of the bottom trend line here, somewhere around like 350, 345, depends how quick it happens. So that looks pretty suspect to me if I'm long. The only reason I'm long this weekend, again, is because of what I showed on the Nvidia and Amazon charts earlier. Okay, so let's go to SPY. SPY has a similar channel going for it, but we never got back up to 442, which would have been the target. We had a bearish engulfing candle on Friday, and what's interesting is that we have held this area. That's a thick line. Let me reduce that. We held this area 1, 2, 3, 4, 5 times, and the time that we dropped below, we gapped up. So for anything below, for wherever this line is right here, 431, which is tough because that's where we closed on Friday. It was a very tough close to figure out what to do over the weekend, especially with the bearish engulfing candle. So I think my initial reaction was to be flat into the weekend and just evaluate what happened Monday morning instead of getting caught in anything. But against my better judgment, I took Amazon and Nvidia. We'll see what happens. But I kind of like SPY for a back test down into here, 428. I say it's a back test because we tested it once. It would just be like a slight little test of 428. We get below 420, or it looks like 427.50 was the low there. We get below that, we have this gap fill at 424. So 427.50, 424. That would be the 50 EMA, more or less, this pink line, which we have held pretty well, pretty consistently. 1, 2, 3, 4, 5. It would be the 6th test of the 50 EMA since last November. So historically a good spot to go long if you think that this grind up continues. That's 424 for anyone who missed that. All right, so that's the basic, I would say, characteristics of this market. Let me get a drink really fast. Okay. Feel free to type any questions or charts you want me to look at in the chat, and I will go through what I consider to be some interesting ones. Starting with, well, that one's not even that interesting in my mind. Let's go somewhere else first. I'm just, this is the first time I'm looking at these charts, to be honest, and I want to find one that I think is a good place to start. That's interesting. Okay, well, let's start with some financials, which have already had their earnings, so we can observe the reaction to their earnings. So it looks like Goldman had a really tough day on Friday. Had a tough week, to be honest, because after Monday it basically sold off its entire move, and now it's going to refill this gap here at 361. This is a tough chart. I don't see an edge in trading Goldman Sachs right now. This little trend line right here that I've drawn and maintained since December last year has, more or less held up pretty well. I don't see anything after, below 345. Anything above 345, it's kind of like just a chop zone for me. If we get below this area, 345, then, well, it's essentially 350 right there, that low candle right there. Just draw it out. Where this thing rejected earlier, and, we have different points of consolidation. I have no idea what happened to Atom. No, I had no idea. I don't keep up too much with people in there. I just pop in from time to time. You know what I mean? But, anything above 350 on Goldman, it's really a chop zone for me. Below 377, above 350, I wouldn't touch this. Okay, but there was another chart let me just look at the sector. XLF, it does look pretty weak, to be honest, because we made this high and then we dropped. And this is essentially a bear flag. It's a really hidden one because of this little fake breakdown here, but I don't know. It looks like a bear flag to me. I would not be long on this chart right now. And it looks like I'm trying to figure out where a good target would be. Probably 34.50, first target right there. Second target right here, which also happens to be. So we have 34.50 and 33. That looks like a decent short to me. That's what I feel there. Let me just go through different sectors really quick. Oh, let's look at the ARK chart. This ARK chart is actually, it's not in a bad spot. We bounced it could, the one thing that stands out to me is a potential inverted head and shoulders type look. That's only if we hold 110 area. Somewhere right there. So possibilities for potentially a bounce in this area. Anything below the 200 EMA moving average, that is redundant. The 200 EMA, I would stay out of it. I don't like this price action below the 200, which is my white line here. But there is, you know, we never got up to test 140, and it's still possible for us to bounce in this zone, make a higher low, and then go upward. That's what I see there. All right, let's just go through some more SMH. Another tough one. This one looks pretty sad, to be honest, but again, you know, it's interesting. I didn't look at this chart before signing on, but the 2.618 extension is at 245.60. It's right there. 245. What is the actual price? It's hard to say. 245, yeah. And I would expect a slight bounce there. So you can see right here and here and there and there. It's held a few times above and below. So a slight bounce there to retest 250 is not out of the question. So 245 to 250, that would be the long. But in general, I would expect somewhat to fill this area down here. So 235. So anything below 245, I would expect 235 to come. Doesn't look too great, to be honest, but there is a short-term bounce spot at 245 all the way back up to 250. Netflix has earnings this week. And you know, I drew this box a long time ago and I'm still having to extend it out, which is kind of ridiculous. But you know, don't trade this before earnings. Just wait till see what happens in earnings. You have no idea what's going to happen. And if you've been selling calls on Netflix, you've been making a ton of money. I have maintained since last year to basically stay out of it as long as it's within this box, or you know, play some sort of like spread strangle strategy or whatever to collect the premium, and that would have made a lot of money. Facebook, let's check out this trend line. We are right at it, it looks like. Not a big fan of the action the last few days, and if anything, if it falls below, looks like this would be our first stop. Could draw it a little bit higher, to be honest. Somewhere around there. 330. So I would look to see if this trend line breaks, and if the daily closes below, it's not out of the question to continue lower. For sure. Kind of a weird chart, but I haven't been trading Facebook at all. I'm just observing this trend line here. What am I missing? Google. Google has been holding up relatively well. It did hit the 3.618 extension and reject, so that was at 250.2577. You know, the price action is kind of odd to me, or not the price action, sorry. The option chain on Google sucks for me for what I do. So I stay out of it, but a nice relative strength name regardless. Any sort of pullback, I would expect, any sort of major pullback, I would expect 2378 to test, which is that 2.618 extension here. Below that, we have this trend line and a 200 moving average, and also this gap down here. But as it is, we are still very much in this uptrend, and it's looking pretty. Just draw another one right here just for Actually, I should draw a little tighter here. There it is. It's a pretty nice chart. I mean, it's getting a little bit... What's weird to me is that when I look at the daily, this right here is not really confirming this up here. So that's kind of concerning. You know, you kind of want to see a little bit more buying. Instead, it looks like the majority has been selling. But, you know, the price is the price. Can't argue with that. I just don't really like how we haven't been making higher highs on the RSI, but we're basically infinitely grinding higher on Google. Not really my favorite thing. Okay, let's turn to some names that have had some RS. Well, yeah, we got Adobe. Really nice breakout. And any sort of pullback to the 21 EMA, I would be buying it. So that would be around 580. I don't know, something like that. I should set an alert on my chart actually for 580. That would be the best option. It looks like 580 makes the most sense. We have one here, and we also have another one here. Those are the levels that I marked out. 580, yeah. 21 EMA is a little bit above that, but I don't see any give. You know, there's give here in the RSI, but there's not much give elsewhere in the price, I mean. So any sort of like, you know, money coming back into tech stocks, I would expect this one to move up first. And my target is up here, 730. That is a really longer target, and I would expect at some point this one to you know, consolidate a bit, but longer term structure, 730. I've been talking about it. It's gonna happen, I think. Crowd. So the sort of thing that I see happening in Crowd is what I would expect Amazon to do eventually. Is sort of like, you know, stagnate and roll a little bit. But let's draw out this demand zone here. Sorry, there's a lot of lines on this chart, but they make sense, I promise. So we have the trend line break here. The bull, this is like an extended bull flag breakout. And that will hold true as long as we stay above 242. Below that, you know, we get into a little bit of a problem with it being a false breakout, using this as a reference right here. And in 225 looks like the next stop below that. What's up, Photonics? Big money, huh? Don't know if I've earned that yet, but maybe eventually. Crowd, okay, so that's sort of like what I see there. I don't want a false breakout. I want it to hold that breakout there. Zoom is actually, you know, so it's interesting. If you got to think about these names and sort of groupings and, you know, what sector they're in. I know that the ARK fund is not a sector, but if, you know, you go back into what I was saying with ARK, it, you know, there's potential for a bounce here in the 114 area with this 200 EMA. And, you know, you compare it to Zoom, there's also potential for a bounce here in this demand zone with the 200 moving average here. So that bounce area would be above 350. Below 350, I would say no, but above 350, it's possible, because so you have like a little bit of confluence there with ARK K in a bounce spot, Zoom in a bounce spot. So that's something to keep an eye on for this week if that happens. Let's see if there's any other names that would. So we have P10, you know, same deal as ARK K. So look at the P10 chart, the Peloton chart, and boom, it's literally the same, like almost the same. Good patterns to recognize. So it really depends if they decide to buy it at this volume 200 EMA support. I think there are some other names that would be in that. FSLY also in an interesting bounce spot at 50. It is a what's the word? Psychological point 50. We've had a big, down area from down swing from 62, where we gap filled all the way down to 50. So it might be time for a bounce back up to 57. So these are like some interesting patterns here that we're feeling out. D-Dog also, bull flagging potentially. It's actually been pretty strong. I would say above 102, which is like right there, whatever that low is. We had an inside day at the 21 EMA on Friday. Any sort of bounce, this thing could get some momentum and retest, I don't know, 110 and then up into 115. So that's actually a good looking chart if we can hold 102.50. That's like one of the few I've seen. Coin, we're getting into the wheelhouse here. Coin also at support. Okay, so Coin is part of this ARK fund stuff. 220 area. If we just gotta think about all this on Monday. If all of a sudden, like, you look at your sectors and ARK K and all these names that I'm going over right now are down, 3-4%, you realize that something major is happening in money movements, where the money is flowing and flowing out of, and that a lot of these names will have broken. Yeah, dude. Throw out some charts. I'm taking requests, of course. The money move, you don't want to see these flush, because as you're looking at these charts, you're realizing, a lot of them are at support. So if they fail at support, it's not a good sign. And you also want to realize how they close. Shop, tough candles here. Not the best. I think I would stay out of this definitely before earnings. Earnings are the 27th, next Thursday, just like a lot of stuff. Not really a fan of this one compared to some of the other ones. I would expect, a better entry would be 1350. That's a much better entry right here. It will have filled this area again, 50 EMA. I like it around 1350, but much better. All right, let's check out Upstart. Obviously, you see my chart is clean. It's not touched. Haven't traded it really. I mean, that's what I see first, and we can go from there. This is just, the chart art. Okay, so basically, if this trend line breaks down, so we have a bearish engulfing candle below the low of last week, which would be 106, I would expect, 100, which was the psychological point here, to touch first, and then below that, 83.50. So that's if we get below the low of the week. That's basically a couple levels for you to look at. 107.20 was the low of last week, and then we have 100 and then 83.50. Above that, it gets a little bit tougher, because as you can see, we have multiple rejection candles. 1, 2, 3, 4, 5 rejection candles at 133. So if you want to get super long, you would want to wait for 133 for the daily to close above 133. Then you can look at like 143, 150, 160 again. That's my analysis. Let's look at some Chinese names. I hate them so much. I feel like I should adjust this trend line a little bit to account for... I don't know. I don't even know, to be honest. It's just so ugly. Not worth trading right now. August 20. Man, that's a long way away. I don't know what... I couldn't even tell you what's going to happen with this chart here by August 20. This one looks even worse. It looks like... I I would not be surprised if Baidu hit 150 after its earnings, if it's before its earnings. I don't know. If the earnings suck, 150 would be the target. JD looks a little better. It changed the trend line. It changed the character. So we have a downtrend. Now we have a little bit of a consolidation. I would like for it to get back up to... Well, let's see. If we get back up to 84, that looks like a better spot to short than go long. So I would look at a short to roll back over to 66. There's a lot of traffic up here. I don't like this red on my chart, actually. I like it like that better. There we go. Up here, we'd short it. Peter suggests BA. Looks bad. I don't know if you caught the beginning, Peter, but we talked about IWM and about how that is probably, if we break down below, what was it, 214? I think it was 214. Yeah, I'll just let you look at it for a second. So if we break down below 214, we have the 200 EMA bounce possibility, but then we can use 214 as sort of a trapdoor ceiling to go short into a longer short that would be around 200 196 area. So that's a really good play. So you got to think about, okay, if that's my primary play, what are the stocks in IWM that would suffer? And a lot of them are the travel names. So we got CCL, looks terrible. NCLH looks bad. Potentially in a bounce spot though. I don't know if we pointed that out here, But again, this is because IWM is at that 214 level. A lot of these names might be near bounce spots. But Boeing is evidently failing this move, this new flag. And you could see like here, we made a new high. After this broke, we made a new high. After this broke, we didn't make a new high. In fact, it's making a new low, which is not a good sign. Yeah, so like if we make a low here, it's below the 200. When is earnings? July 28. We have another week and a half to basically maybe retest 200. I don't know exactly why I have this line here. I think it makes a little bit of sense, but it would make a little bit more sense like right here. So, I mean, like there is congestion here. That's why I would have it there, but makes more sense around this like 200. That's more of a zone. Tough to say. 200. That's sort of like it would be the short target. Here's yeah, that's what I got. And then, okay, if we look at the broader play that I was talking about, shorting IWM to 200, you'd be like, okay, where would Boeing end up? It would end up around here, 172, which would fill this gap. That would be really bad. Worst case scenario for Boeing is we get to fill this gap down here, 150, 157. That is what I see there. Don't see any panic in the chart though, which is fine. Some other names that look to be holding up. Docu put in a hammer and a continuation on Friday. The hammer bounced exactly where I was sort of anticipating. I didn't play it though. I was focused on some other stuff. Actually, no, the 200. So it recovered this 21 moving average. Pretty strong, to be honest. Pretty strong. I like the company, and I don't know if that should bias me long on this one. But again, just looking at the price, anything above 267, it's holding a breakout. So right now we just got a back test of the breakout, and that seems to be okay with me. But you know, the break, a continuation would need above 290 for sure. How do I determine what could be a gap fill? I don't know exactly what you mean by that. Are you asking me like, how do I know if a gap fill could happen? Or are you asking me what a gap fill is? Lulu hit supply here. I'll answer your question when you get back to me. Lulu hit supply here. Basically rejected the same exact spot as last time. It's still caught in that range. Another one that I'm interested in because of the way that the car market is going right now. Carvana. This thing has been really, really strong. It's definitely a gap in the price. You just got to look at the daily chart. And what was I looking at? Oh, Boeing. All right, so this was a gap. You know, this was a gap. That's a gap. That's a gap. That's a really big gap. You know, there's some smaller ones and there's some bigger ones. But you just look at the daily chart, you could see. I mean, if the price, so let's say the price closes at 260 and the next day it's 257 and the price intraday never goes back up to touch 260, it just sort of like keeps dropping. You would say that the gap is between 260 and 257. All right, let's look at Uber. Yep. Overnight. Uber looks really bad, actually. Wow. This is an H pattern here. And so right here, this is a big gap. Right in there. So Uber looks like a short to me, especially below 47. Looks like this would bounce 43.60, but below that 40. I gotta put Uber on my short list. Remind me of that. It's back below where it initially broke out of, and that's not a good look. We have a little bit of an H pattern. You can see the H here. H's go lower. Okay. Let's look at Roku. Did I answer your question? If I didn't, you can let me know. Roku, I would like it to get back to maybe 380, 390 for a bounce. It would be, in my mind, a short-lived bounce, but it's a bounce nonetheless. We have our levels marked out here. Very clear. 1, 2, 3, 4. No problem. 1, 2, 3, 4 are the levels. Right now we're in between these two. Above this, we're up in this range. It's how I determine what's worth it and what's not. Snap. Don't see much there. Twitter. I'm not really sure about this this green zone here. It's a little bit thin for me. I think over here it's a lot. I feel like I should make this a little bit more opaque, or don't know exactly how to do that. There we go. I think it's a little bit better. Okay, so Twitter, a little bit tougher. This rejection is tough. I don't know. I'm just looking at stuff, and if I don't see anything, I can't make a comment on it, you know? Apps has been in danger ever since it sold off like 15% in one day. Right here. Look at that volume. July 2nd. That was really weird. There was no news, no nothing. It just sold off, and then we had a little bit of a bear flag. And now we have the 21 crossed over the 50. It's the momentum is definitely swinging down. I don't know why. Oh, here's another gap. You know, earnings gap. Anyway, the momentum changed. Don't know why, but below the 50, we have a lot of room below. 53, 50, 45. Really, really weird sell-off there. Sort of like what happened here. I mean, look at that. Looks even worse now. This turned into a big bear flag. You could see it just retested this zone here and then sold off again. Yeah, I only use the EMA. I don't think it really makes a big difference as long as you only use one type. You can't use both EMA and SMA. You just gotta pick one. It's a preference thing. I don't know why I preferred one over the other. I just started using it, and I've been using it ever since I started. So Spot, not fun. DraftKings also looks bad. Wow. DraftKings kind of looks similar to Uber. So here's this H pattern here. I can't draw it, but you can see it, you know. I could draw it if you need me to. Here we go. Be like, oops, come on. I can't draw it, never mind. That's what that looks like to me. Trying to pick up some more here. Grog also sold off. I really didn't like this sell off. We had a little bit of a bearish engulfing candle here, and then the bear flag, and then it just continued lower. So 37 is like sort of my stop, to be honest. If we get below 37, I will be out of my position that I've been holding for a long time. I know it can be a little bit lower here. Like I should maybe a little bit like that. Yeah, it's still 37. If we get below that, I would rather just stay out of it. I use 9, 21, 50, and 200. I don't know if you need that many. I don't think you might not need the 50. Some people just use 21 and 200. Which I think works, but I trade on very short time frames sometimes, and I like to have multiple because they matter in the shorter time frames. I'm trying to think. When I traded this actually, Disney. What an awful candle on Friday. Bearish engulfer. You can see. Completely failed a lot of stuff. Broke out of this triangle upward, and now it will backtest it. But this longer trend line here, you know, it could potentially get all the way down into the 170 area again, which would be really bad. I don't see a play here necessarily because it's a little bit congested, but definitely not long right now until we figure out this little area here. Let's look at gold. Another bad candle on Friday. Yeah, I would probably just like be biased short here below that area. So okay, so here's the gap, and then we filled the gap. Now below, as long as you're below that gap, you can be short. Yeah, GDX looks even worse. Didn't even recover this gap. Yeah, that was a lot earlier. Alright, this thing has gone on for an hour, and I'm getting hungry, so I'm going to end this soon. Ford and GM definitely sold off their moves here. Open, or GM looks worse. Open, I'm gonna retest that low, but 1384. Yikes. All right, well, in sum, so here's another gap right here. That's kind of interesting, though. Anyway, y'all, I think that pretty much covers everything I wanted to cover. Still focusing only on the first 3 names that I covered. So, and then IWM. So if you missed that, I would rewind and just basically watch those first, 6 minutes of charting, because I think that those are the most relevant to this next week for what I do. A lot of, in my mind, these other charts are pretty much just noise for now. The leading indicators are Apple, Amazon, even Nvidia, SMH, IWM. Yeah, it's automatically saved to YouTube. You can go back and watch it. It'll be in my videos, my live stream videos. It's archived in my YouTube channel. All right, y'all. I'm gonna go eat dinner. Thanks for joining. Good luck this week. I'm probably gonna size down, I would say. Yeah, that's a good strategy for me right now. Unless that IWM short sets up perfectly, I'm gonna size down. Well, if the IWM play sets up, I'm gonna go all in. Not all in, but you know what I mean. I'll go full size and a half on it, but other than that, keep it small. Keep it small. Use your levels well. Respect your stops. All right, y'all. Have a good one. Peace.